Hello, Jim here. Selling options is a great way to make some extra income. One of my favorite strategies is the wheel strategy. When you pair it with a inexpensive stock that's still a good quality stock, it can really increase the amount you can make on a monthly basis. Today, I'm going to talk about 5 securities that I really like running the wheel on. I'll share with you why I like them, and then I'll also talk about some trades that I did recently that brought in quite a bit of income. So stay tuned. I think it's going to be well worth your while. Okay, let's go ahead and jump right in. Now, what I mentioned in pretty much all my different videos and in my membership is to pick good quality securities. Now, if it's companies, look at fundamentals, look at return on equity, return on capital, how much debt do they have? Little debt is the best, or no debt is even better. Or are they paying a dividend? If they are, what's the payout ratio? Hopefully it's a low payout ratio, below 50%. Are they growing that dividend? And if they're growing it, have they been growing it for a long time? I also like to look at earnings. Are they growing earnings? Or are they growing revenue at a nice steady pace? I also like to look to see, are they buying back shares? What I don't like to see is when a company is diluting shareholders, they're issuing more and more stock. So those are a few things for the companies. Now for securities like ETFs, what's critical is being sure they're picking good quality companies to hold. The same criteria, they're looking at fundamentals. They may also look at technicals when deciding a price. I think technicals, once you've determined a company is fundamentally good or an ETF is fundamentally good, it's important to see, look at the Bollinger Band, look at the technicals. Is it at a good price? Is it low on the Bollinger Band, meaning it's towards the bottom of the Bollinger Band, meaning the averages, it's closer to the averages or below the averages. So having a good fundamental, where you pick a good quality company at the right price, if you do that correctly, you've won half the game. Typically, you're going to do really well with both investing and trading. So next, what's really important, especially if you're running the wheel, or a strategy, any of the strategies, is right sizing based on that company or that ETF. So if it's an inexpensive ETF, you can probably do more contracts. I'll do more contracts with less expensive ETF. Like a lot of times for a Mara, which is like $15 to $20 a share, I might do 4 contracts for that trade, and I might do several trades versus having one trade with tons of contracts. So right sizing the position is really, really important. Now, when you're doing the wheel and you're not 100% you want to own the stock, but by running the wheel, you can earn really good income off it. Sometimes you can make more money running the wheel off an inexpensive stock or a quality stock than owning the stock itself. So when you run the wheel, what you do is you sell a cash secured put. I tell people to look to see what the price is for the long put. And if it's cheap and expensive and you can buy puts and do spreads, then why not buy it? Go ahead and buy that inexpensive put. And then once you have that, you can take a little bit more risk. I typically tell people for my vertical put credit spreads to do a 15 delta, but if you're doing it for the wheel and the stock is already at a really good price, you can take a little bit more risk, maybe do a 30, 35, 40 delta. If you can still do a lower delta and make a fair amount of premium, then that's okay too. Again, you're doing this because you found a stock and you found a stock that isn't overly expensive. It's towards the bottom of the Bollinger Band, or if you look at its 52-week average for the stock price, it's closer to the bottom of that 52-week average. So once you sold that cash secured put, if it gets assigned to you, you're okay with it because you can turn around and sell a covered call, usually really close to what you sold the put for. So maybe you sold the put for 15. It gets assigned to you. Well, then you could probably sell the call at 15 too, again, bringing in some really good premium. So you can take a little bit more risk. I like to go a little bit shorter with my wheel trades. I still will look between probably, I always tell people, 45 to 60 days for vertical put credit spreads. Well, for wheel trades, if you can really do them on a monthly basis, I like to do monthly trades. So if you can make it expire in about a month, so you make the trade 30 days, and you again use a slightly higher delta, then you're kind of getting out of these positions on a monthly basis. So you're able to wheel a little bit more. Now, if it gets assigned to you fairly quickly, maybe after a week or two, then you can actually run the trade again. Where you sell the cash secured put, it gets assigned to you, and then maybe 2 weeks later, you can sell the covered call again at a really good price, and then repeat the process again and again. And if you're doing a shorter expiration, it'll just work out a little bit better. And then the strike, like I said, if you're looking at the stock and the stock is a $16 stock, and you can make double from going from 14 to 15 for the strike price, well, then go to 15. It's kind of common sense, even though the delta is a lot lower for the 14, picking up more premium for $1 more. And again, and if you've picked the right security and it's a good quality security, you're perfectly fine with doing that. Then once you've set up the trade, you've done, you've been wheeling this position for a while, what becomes critical is managing it. So I typically will look at those trades. I'll keep track of how profitable they are. A lot of times I'll look to see, can I roll it? I might just, click. If it's Fidelity, I might just go into Active Trader Pro and try to roll it and just see what kind of profit it looks like or how much I could make if I rolled it. Or if it gets dirt cheap, meaning, if you're dealing with like Mara, which relates a lot to Bitcoin, Bitcoin goes way up, Mara will go way up, and then suddenly a position can become ultra cheap, and it's just going to sit. It's, the stock, the strike price is 15, but Mara is 22. Well, at that point, it's very profitable. It makes sense just to close it and potentially open another position, maybe a couple dollars higher. So managing it becomes very important. And again, if you can ever close the position early and reallocate that capital, you can churn it that much quicker. You can make that much more in your account. And it really does turn into a cash machine. I've been really shocked with how much I can make, and especially my smaller accounts, by trading good quality securities that work well with the wheel. So finally, what I'm going to do is I'm going to share with you some of the wheel trades I've done recently, and then some I've done in October. I'll talk about them. I'll talk why I like these stocks and why I like to trade them. So stay tuned. I think this part's going to be really interesting. So let's go ahead and jump right into it. Okay, now what I've done is I've set up a new portfolio, and this is just for wheel trades or stocks and ETFs that are good for running the wheel. So recently I've done several trades on each of these. And this group right here, beginning with XLE, XLE is an ETF I really like to trade. It's the energy sector. It usually stays between 70, usually 65 to 85. Recently, it's been more around 85. But if you trade in it, you can trade in the low 80s, high 70s. And I currently don't own any, and I've done probably, I don't know, maybe 10, 20 XLE trades over the last couple of years. So it works out fairly well. I might even need to take more risk because, again, it's a really good ETF to own. It has most of the big boys. It has ExxonMobil, Chevron, quite a few. We can actually look real quick. So the holdings, the big holdings are, Exxon, Chevron, ConocoPhillips, Williams Companies, Marathon Petroleum, Phillips 66, EOG Resources, so those are the top holdings. It has fairly good ratings, even though I don't necessarily agree with this sell. Sometimes for ETFs, you get weird values in some of these kinds of ratings. It works really well in Seeking Alpha. for stocks, but ETFs, it can be a little bit odd. But XLE is, in my mind, one of the better ones to work with. And you can see it kind of moves sideways. If you can trade right in the middle, like right around 80 or 85, you can do quite well. I mean, that's only 1 year. But even for 5 years, it really does not move that much. So, like I said before, I've traded it a lot, and it's worked out really well. It pays a pretty good distribution, too. I believe it's, yeah, 3.3%. So if you end up owning some of it, you're earning a pretty good dividend. Now, if we go to this option wheel securities that I set up, Chewy is another one I like. Chewy is the pet brand that works really well. And I've been trading it a long time, wheeling it, and have done pretty well. I think I owned some shares at one time, and then they got called away. And it's right now at a really good price. It's pretty near its 52-week low. It's currently 33, and its 52-week low was 29.25. It has fairly good profitability, good cash flow. I'd like to see a little bit higher with margins, but good company overall, fairly good growth. Valuation, I don't, again, necessarily agree with this. With their growth, I don't see them as way overvalued. Also like to see they only have 529 million in debt and over 600 million in cash, which is nice. And dividends, they don't pay dividends. Earnings, they've been growing them pretty well. Did they recently have earnings? 9/10. So yeah, back in September they had earnings, and they've done fairly well with earnings, and they are growing them. So 128 for next year to 162 to 181 to 202 to 222. So good steady growth with earnings. You know, they're not overly pricey at $33. So another one is I've done recently is Ethereum. It's a little bit down recently, but it's something I'm new to crypto, so it's one I decided I'm going to wheel. If I end up owning some, I'll probably keep it. But I did this trade earlier in the week, and it has pretty good rating, SA Analyst and Quant. So I think I sold the 35.25, but we'll look at that trade here in a minute. I also have FCX, which is it's a Freeport McMoran, and it's mining. They mine different kinds of minerals, and they tend to do pretty well too. They also pay a dividend. Their PE isn't crazy. They have good profitability, A+, good growth. Not the greatest growth, but pretty good. Valuation is not bad. They do have a little more debt because of just the nature of the business, but they got a lot of cash. If we look at profitability, I believe their cash flow, yeah, quite good, very good cash flow. Dividends, their payout ratio is relatively low. They've been growing dividends. Looks like not for long. They may fluctuate depending on how much they make with dividends. Now earnings looks pretty good. 152 for this year, 222 for the next year, almost a 46% increase in earnings, then 283, then 332. So at this point, they've doubled. By 2028, they're projecting to double. Then they fall back in 29. But for wheeling, again, a good company for wheeling. And then next we have PINs. I did this recently. They missed earnings. And this is one of the things I talk about. If I like to trade around earnings, so if a company misses earnings, I will typically like to make a trade on them. So they got hammered. I think they were down like 25, 30%. But they're a good company too, good profitability, pretty good cash flow, fairly good growth, fairly good valuation. Again, I don't necessarily always agree with the valuation that Seeking Alpha provides. Capital structure, only 200 million and 2.67 billion in cash. So they're sitting on quite a bit. And then if you look at their earnings over time, well, here, let's see, they didn't miss earnings by much. They missed normalized actual only by 4 cents, and they did beat revenues, and they did beat GAAP earnings. So if we look at their estimates, they're increasing. $1.78 for 25, 205, 26, 241. So again, 412 by 28. They're another one that's potentially going to double their earnings. And their ratings are good. Their PE ratio is for a company that's growing. So if you look at their Bollinger Band, it's definitely, I believe it's below the moving average of the lower band. So again, another good company for running the wheel on. Maybe you don't want to own pens, but again, they were down quite a bit just when they had earnings, which was the 4th, and today's the 6th. So they were down quite a bit yesterday. If we come over and we look at their 5-day, yeah, you can see this was on the 4th, they dropped majorly. They rebounded a little bit. And that's what typically happens. If one of these stocks gets hammered like they did, it'll drop majorly, but then it'll slowly regroup, and before long they'll be trading at 28, and then maybe within a couple of months back at 30. So that's the list of companies I really like for this option wheel strategies. So I provide this to my membership. This is a new portfolio that I'm sharing. I'm going to even add more and provide it to my memberships probably later this week as I identify a few more stocks to also include in this list. So next we'll actually jump in and we'll look at a couple of the trades. We'll look at Patreon and what I posted to my membership when I made the trades. So hold on, let's jump into that next. Okay, now I did realize I had forgotten one more on the list, which is Mara. They're a Bitcoin miner. They're probably my favorite one to trade right now. You can see they move around between 15 and 20. They did drop back in April to 11. But I trade them probably more so than anything else. They recently had earnings that were fairly good. Their earnings are kind of odd, so you can't just look at their earnings. They keep since they're a Bitcoin miner, they keep a lot of the Bitcoin. So they almost have as much Bitcoin as their market value. So we'll just do a quick look at them, but remember, it's hard to gauge them. They're a little bit different, being that they keep almost all of the Bitcoin that they mine. So here, profitability looks good. I mean, cash flows, again, a little bit weird because, they have enough cash for operations, but then they've got a ton of Bitcoin. So good profitability. They're mining a lot of Bitcoin. They're kind of the low cost producer. And they're getting into other things too. So they also have fairly good growth. Valuation is showing it's undervalued. And that's what I'm seeing. Like even today, they're down to 1636. So you can do some really good trades. This will be the first I'll share with you the trade I did on them earlier today, and it worked out really well. They don't pay a dividend. Earnings, like I said before, a little bit odd. Again, because they're not really a typical company. They don't have just pure cash flow. You have to almost measure them on how much Bitcoin they produce. And they're also tied with Bitcoin. My guess is Bitcoin must be down, because if Bitcoin is down, they're down. If Bitcoin is up, they're up. So I just really like trading them. I end up doing, and we'll jump into the trade here. So here's the trade I did just earlier today, a couple hours ago, an hour ago, literally. So I sold 4 vertical put credit spreads on Mara. And you might say, well, why are you doing spreads or vertical put credit spreads on the wheel? I always tell people, if the long is cheap, then why not buy it? And that's what I do. I end up buying the long, which you don't have to. You could just sell the 15 put and don't have to buy the 12. And they're expiring on 12/5/25. So right at a little less than a month, about 29 days. So I made 274.66, and the required capital was just the spread, so $3. And there's 4 of them, so $12 times 100. So the required capital is $1,200. So I made 274 on 1,200. If I annualize it, it's almost a 288% return. And then I decided to do another trade with Mara. This is another wheel trade. This is what I share with my membership. If these are assigned to me, I will. It's like having 100 shares of a $60 stock. Think about a stock like Microsoft that's $500. How many $12 shares would you need to do to equate 500? I mean, it would be almost 50, I guess, 50 shares. So, and I could do like 10 contracts, but I prefer to do more trades with 4 contracts. So I could do one trade with 12 contracts, but I'd rather do 3 trades with 4 contracts each with slightly different expirations and strikes. So instead of doing more contracts on a single trade, I prefer to do multiple trades with 4 contracts and different strikes. What I mentioned a minute ago, I do own 400 with a cost basis of 12.12. So I am selling covered calls on some of them too. So when it bounces and it goes really high, I'll sell covered calls in my Roth and 300 shares in my brokerage. So I also have this in my brokerage where I'm wheeling it to bring in extra cash in my brokerage. And they have a cost basis of 1276. Mara has eclipsed. Zoom used to be my favorite position to trade or favorite stock to trade, but now it's definitely Mara. Here I'm just talking about a rough day in the markets and that we bounced off the lows. And this is true. I'm staying cautious and I'm keeping plenty of cash. There's a lot of headwinds with the government being shut down, with, the Supreme Court's going to rule at some point. I don't think it's going to be till probably late November, maybe the beginning of December, but they're going to rule on the tariffs and what Trump can and can't do. And then unemployment it's really, there are a lot of concerns about unemployment and the economy in general. So a lot of headwinds. I don't know. Today we're down pretty big. We're going to have a down week, probably 2 to 3% on most of the indexes. But I don't know if this is the beginning of a bigger drop. It reminds me a lot of like in January, February, before the big drop in April. We kind of, February was kind of a slightly rough month. March was a little bit worse. And then we really took a big drop in April. It's also a lot like 2018 when we also had a shutdown. I think the market took a big dive in December. And again, I wonder if that's also could happen. Maybe the rest of November may be a little bit rough and maybe December. So I am holding on to more cash and I encourage people to do that. I also encourage people to look at any of your open positions because they're with earnings, there are stocks that are doing really well. You may have some you can close early that are very profitable. So be sure to go through your other positions, and see if there's anything to close on a day like today. So this is Zoom. I also will roll these. I rolled one earlier in the day, so I did 2 trades in Zoom. And it just works out pretty well. If they get assigned to me, like I said, I start selling covered calls. So next, let's jump into, we'll look at pins or the Pinterest trade I did yesterday, and we'll talk a little bit about it too. Okay, here's the trade I did on Pinterest yesterday. I did 3 contracts with them. They're a little bit more expensive. So again, right sizing the trade. I did a 25-20, so I sold the 25, I bought the 20, and I set it up to expire on 12/19. I like the premium for the monthly expiration, which is 12/19. I brought in 296.43, and annualized, that's like 164% return. So here I just tell the members why I made this trade. Pins was way down today due to missing on earnings. And they barely missed and just got hammered. They're down 21%. I noticed ELF also missed earnings. I didn't see the details, but I noticed they were down 37%. That, in my mind, is also a telltale sign that the market is still a bit pricey, and for a stock to drop like 21 to 35% in one day is a little bit crazy. I think they are oversold at this point, and today they're back up. They're up $1. We were just looking at them a minute ago. I think it was like up $1.20. I'm doing this as a wheel trade. If they are assigned to me, then I will sell covered calls close to the current price. So I would probably sell a covered call right around 25 again because I brought in some pretty good income. And I could probably pick up maybe about the same amount and do a very similar trade. I could go out to January maybe, or if it gets assigned to me quickly, I could do the trade again for 12.19, but as a covered call. They have good profitability, nearly no debt. Their return on equity is 48%, which is really good. They are still projecting growth over the coming years. They are still expecting to double earnings over the next couple of years. So, if you hold on to them for a while, meaning, maybe you don't want to run the wheel on all of them. So maybe run the wheel on 2 contracts and keep 100 shares, or like I've done with Mara, just keep accumulating more shares, but keep doing new positions. I do think Bitcoin's going to continue to do well, but yeah, you never know. Bitcoin could go the other way. But I do think Pins is going to continue to do well. They're not my favorite social media, but I do like the company. I'll look at it at times, especially, if I'm going to have a get together and I want to think of a gift, or, maybe how I should decorate for Halloween or something. I will use it at those times. And I might tie it into YouTube at some point, but it's definitely not my cup of tea. And here I mentioned the long puts were cheap, so I went ahead and I purchased them. Fine to do this trade as a cash secured put. And again, I shared this with my community, and I had several people that did the same trade exactly. I did have a few people that just did it as a cash secured put that didn't spend the $31. And this is just a screenshot from Fidelity, and that's what I typically do. I'll do a screenshot. Even though it shows 100 here, these are all both for 3 contracts. And then I also will copy it to Discord. I did forget to copy a trade I did yesterday, and someone let me know pretty quickly that I'd forgotten to copy it. I got sidetracked at one point, and I've added some new things. Some of the members are doing scans using Thinkorswim and sharing the scans with the rest of the membership. And I created a new Discord scans channel. So it's real interesting. It's kind of got me more curious about learning more about Thinkorswim. So that's what I wanted to share with you guys. Let me know what you think. Do you have any other companies or ETFs that I should add to this wheel portfolio within Seeking Alpha? And if you're interested in Seeking Alpha or Barcharts, I am an affiliate. You can find details in the description. If you use it, I will get a kickback. But you do get a bit of a discount if you go through my affiliate link. And as always, thank you for taking the time to watch the video. I truly appreciate it. And I hope you have a wonderful rest of your day.